Alright everyone, Cowboy Trades here, welcome back to the channel for another update. So I believe volatility is about to return to the markets in a major way. I'm also going to talk about something new in today's video that we've never discussed before on the channel, and that is how traders price in forward volatility using the VIX and how this affects both bull markets and bear markets. Now, before we do jump into this really important chart over on the VIX, I did just want to give you a super quick update on some other charts. The VIX and the VVIX, in the slightly lower time frames, they are starting to grind back up. The CBOE Implied Correlation Index, which if you're new to the channel, we look at this because this is inversely correlated to the equity markets and also your crypto markets. If you are new and you haven't heard of this before, feel free to pause the video and read this brief synopsis to get a better idea of how it's calculated and how it's used. But basically, right now, the CBOE implied correlation is finding a strong level of support on the monthly time frame and it is bouncing back up. If we switch over to the weekly, we did open very high this week up at 38. So while the weekly candle body is actually red, bear in mind we closed last week down here at 35. We opened at 38, and this huge gap up to 38 was telling us that a lot of implied volatility was going to come into the markets. And of course, we've all seen what's happened in the past few days. This is a great indicator to let you know when volatility is going to come in. And if we do look at the monthly time frame, you can see the stochastic RSI is getting very close to being extremely oversold. So when we do have that bounce back in the stochastic, you can definitely see a huge move back up in the CBOE. And if we come over to the weekly time frame for the CBOE, if we look at the Heiken Archies, you can see that they are finally starting to move back up green. We're looking at this because the CBOE moves very one directional, and right now it's looking like we're going to have a tear to the upside, with also the weekly stochastic RSI telling us that a big move is soon to come back into these markets. We quite recently talked about on the channel how volatility is going to come back in the form of the yield curve, which is breaking down into new lows, meaning the bond markets are once again pricing in a recession, just like they did before the 2000 crisis, just like they did before the 2008 crisis, and just like they did before the Gulf War, all huge financial recessions. Also, before we discuss the main topic of the video, being this VIX chart and how traders price in forward volatility, I would just like to let you know stock market fear and greed indexes are currently sitting in greed, and your crypto markets are currently sitting in greed. So, you know, we're quite overextended right now. There's a lot of greed in the markets. The bond markets are telling us that we're going to have a recession. The CBOE implied correlation index is telling us that volatility is going to start heading back up. The VIX and the VVIX are starting to tell us that we're going to go back up. On the monthly time frame, the 2008 VIX Fractal is telling us that we're going to have a move back up. So what is this new thing that I wanted to talk about for volatility outside of everything that we've just discussed? Well, this is what happens in bull markets, and coming into bear markets, what happens when traders start to price in forward volatility. Now, what do I mean by pricing in forward volatility? Well, what I mean by that is if we look at the VIX, this measures volatility. So how do traders price in forward volatility? Well, when you're expecting a lot of volatility to come into these markets, you can see the VIX putting in a series of higher highs, or higher lows rather, higher lows. Now, what you can see over here, let me show you how the VIX works in bear markets first. So, well, bear markets for the VIX and bull markets, healthy bull markets for your equity markets. So, for example, you have a healthy bull market that started in the year of 2003 all the way up to the financial crisis. And because of this, you saw a collective, a very healthy move back down to the downside for the VIX. Let me make this a slightly different color so we can distinguish from my drawing pattern. You can see over here, after the dot-com crisis for the S&P 500, what you notice is the S&P 500 bottomed out and went on a healthy bull run. And we say healthy because if we look at the volatility index for the S&P 500, the VIX was very much moving down, making lower lows. But what happened over here? We put in a low, and after that point we started pricing in forward volatility, and the market started putting in higher lows. Now, you may be, not, it's kind of a little bit hard to see over here, but you can actually see there were multiple times that we were putting in higher lows for the VIX before we actually started to break down into this bear market. And then you can see after a multitude of higher lows, we obviously started breaking down into the financial crisis. And then you can see over here, what happened is the VIX topped out and the bear market low was in after 2008. and the VIX started very healthily moving down to the downside while traders were pricing in less volatility to come into the markets. Now, what you see over here is when we look at the VIX, you start to notice, once again, traders pricing in more volatility coming into 2017. You can see, we established lows here, higher lows, higher lows, higher lows, higher lows, and only when we started making these higher lows, like right here, this higher low right here, you can see how many higher lows we priced in before the top was actually in. What this was telling us that at this point, we were having a healthy bull market. At this point, all the way from, here to here, we are having an unhealthy bull market, and traders are starting to say, hey, we're getting close to the top and volatility is soon going to come into these markets. Now, why do I point this out? Multiple times before, in 2008, when traders started pricing in higher volatility levels, this normally correlates to, once you finally have your final touch point on the trend line implying more forward volatility, once you have that huge blow off top for the VIX, where you have a huge run up to the upside. It was right here for the 2008 crisis. If we come over to where we are right now, let's say, hey, once again, this can go on for longer. We can have a bounce back up and we can hit this trend line again and then go up higher. Or let's just say, for simplicity purposes in this video, let's say that we're just going to have a very one-directional move to the upside, just like the 2008 VIX fractal shows that we have been showing you on this channel. Now, I personally think we can bounce on this trend line one more time, two more times, three more times. But once again, for simplicity, let's assume that this is the final touch point on this trend line, just like over here. Now, when the VIX starts moving up in this way, this is when you start seeing meltdowns happen in your equity markets and also your cryptocurrency markets. Now, do bear in mind, we do not have data on how Bitcoin responded to the 2008 financial crisis because it wasn't trading at this point in time. So all we can do is look at how the equity markets responded. So after the VIX, traders were pricing in more volatility. They were saying, hey, at this point, this bull market is no longer healthy, and we started to snap to the downside after we had that final push up. Traders have been telling us for the first time since the 2000 financial crisis during the dot-com crash that we were pricing in volatility for a very long period in time. Since here, we've been making higher lows since this trend line. And it's been about, if we come over to the 12-month time frame, you can see we've been pricing in forward volatility for the past 6 years. So right now, the VIX is sitting on this trend line and it's starting to bounce up. You've got your VIX and your VVIX heading up in the lower time frames. You've got your CBOE implied correlation on multiple time frames telling us that volatility is going to return to the markets. You've got your yield curve, basically bond market traders predicting another recession. You've got greed taking over in the markets. And looking at how the VIX has previously responded when traders start pricing in more volatility coming into a bear market, these last touch points on this trend line imply, one final blow off top for the VIX, which we have not seen at this moment in time. Coming into the 2000 crisis, you can see over here, you had one last blow off top before the bottom was in. Over here in 2008, we had one last blow off top before the bottom was in. Do bear in mind as well, you can see an uptrend, traders pricing in more volatility. This was, I can draw this as a line of best fit through the data points, but we didn't have like a linear uptrend over on this one. But you can see traders were pricing in more volatility. We had one final blow off top. Traders were pricing in more volatility. We had one more final blow off top before breaking down. Traders were pricing in more volatility. We're likely to have one more blow off top before we find the bottom, because bear in mind, this blow off top over here was the event which cannot be named on YouTube, the March 2020 Black Swan event. But nonetheless, we have not seen the blow off top for this bear market cycle. Keep your eyes on it. This is very likely going to be when the VIX moves up and has a final move up. That is probably going to correlate to one of the last moves back down for your cryptocurrency markets and also your equity markets. So for today, my friends, that's all I've got. If you enjoy my content, as always, let me know down below by leaving a like and a comment. Share the videos with your friends. If you want more of my posts, charts, memes, economic data, be sure to head over to my Twitter at 618_cowboy. Come and join the Discord. Head over to my YouTube channel. Click on the About section. You can see my Twitter, Discord, Instagram, and my merch store are all linked down below. But for today, That's all I've got. It's been your boy Cowboy Trades. I'm out. Peace.